Hello and welcome everyone to today's training session with Binary.com, how to trade Forex on MetaTrader 5. So today, of course, we will be going through during the live sessions, tips on how to use Binary.com MetaTrader 5 platform. We'll show you how to set up your charts and indicators. We'll go through live market analysis. Today's session is very much focused on Forex. So we'll be having a close look at the commodity currencies. We have quite an important event tomorrow, which is the European Central Bank announcement. And we'll have a look at some of the trade ideas as we get into that. But more importantly, actually, how you would set your MetaTrader 5 platform up from the raw charts to actually charts with indicators and how you would look to execute positions on the platform as well. And of course, we'll be going through Q&A. So any questions at all or contributions, feel free to put those in the chat during today's session. So before we get into it, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading, and as internationally respected experts, our analysis and our opinions on the metals, the energies, the commodity currencies, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. And over the last 10 years, myself and my team of experts, we have trained and mentored thousands of private traders from all over the world on our exclusive research-driven strategies. For further information on our services, please do go to www.jointhelivetradingroom.com. I would also suggest it's well worth making sure you're already subscribed to our YouTube channel as well. There is where we put out regular reports and you can get updated with the latest forecast that we put out there, certainly for gold, silver, and also crude oil as well, and the commodity currencies. So I just put the link there so you can go across to the YouTube channel, and make sure you subscribe to the Binary.com YouTube channel as well. That way you can watch webinar replays and get kept updated with the latest news developments in the markets as well. Okay, good. So with that, let's get into it and let's just go through the actual MetaTrader 5 platform. I'll talk you through some of the trade ideas I'm looking at with respect to Forex as well. So I'll go over and share my screens. You should be able to see that very shortly. So just bear with me as I do the screen share. Okay, so just a quick check. You can see that okay. You should be on a raw chart at the moment of the US dollar, Japanese yen. Yeah, fantastic. Thanks very much, Sharice. Okay, super. Right, so this is when you first set up the actual platform within binary.com. You have the ability to log into your portal, and once you're logged in, one of the drop downs on the top right hand corner, it will say MetaTrader. And from there, you want to click on MetaTrader and open either a demo or a live account. Once you've opened that account, you can download MetaTrader 5. And when that's been downloaded, you will be presented with a chart that looks very similar to this. This is a raw chart on the MetaTrader 5 platform for CFD trading. So that gives you the ability to have access to a lot of markets. So today we're obviously more focused on the Forex markets. That's what we'll be talking you through. But essentially this allows you not only to be restricted with up or higher or lower or up and down trades on binary, you can actually trade the pound per pip or dollar per pip movements on the platform, which gives you a lot more flexibility, particularly as we get to a major news item like we have tomorrow. So I'm going to be looking at, today I'm going to be focused on commodity currencies, which includes Australian dollar, the New Zealand dollar, the US dollar CAD. Because we have the European Central Bank announcement tomorrow, we can look at some of the currencies which tend to look and favor from US dollar strength. That would be like the US dollar Japanese yen, for example, or weakness as well, US dollar Swiss franc 2. Okay, perfect. Let me just check. Just checking with that. Sharice, do I need to have a look at that note? I can see it partially, but I can go back and just change the presentation to come back to that. I'm not quite sure if that is a note with regard to any sound issues. I'll tell you what I'll do. I will come over. I'll go back and have a look through all the questions shortly as well, just once we've gone through some of those raw charting. So I'll talk you guys through the major markets that we're looking at right now, which is the commodity currencies, which of course Australian dollar, US dollar, New Zealand dollar, US dollar CAD, and we'll have a look at the major crosses there as well, like the US dollar Japanese yen, US dollar Swiss franc, and so forth. So we'll have a look at those two, which could benefit certainly from US dollar strength or weakness tomorrow around the European Central Bank announcement. When you first downloaded the chart, you'll be presented with a raw chart like we have at the moment. So it'll be grid lines, grey grid lines. You have the green in the middle. This is essentially be bars, so you've got green bars there, and you'll have the automatic time frames there. Normally it's 1 hour, so you want to shift that to daily. So we're just going to take a raw chart, and I'll talk you through the process of what you want to do next once you've actually downloaded the platform. So for some of you, this will be really basic. You would have done this already. You'll know how to do it. Others, this will be useful just to actually set up your charts. And then I'll show you some of the indicators that we can add to your platform and how you would execute trades on MetaTrader 5 as well, and how to really trade Forex on the platform. So first of all, when you have your raw chart here, if you right click on the market watch, you can go, of course, and go to hide all or show all. If you go to hide all, it will only show the markets which are presented in the main screen. So at the moment, I've got Australian dollar, US dollar, and also US dollar Japanese yen. If I right click and go to show all, it will show me all the different Forex pairs that are available for you to review and essentially trade. What I like to do is have this on the right hand side. You can move the market watch to either the left hand, you can put it at the top. I like to have it on the right hand side. It just makes it easier to drag each chart. And all I need to do is, once I've got a template, I would drag a chart from right to left there. So US dollar Japanese yen is what I'll be focused on at the moment. So I can switch between charts really easily. I can move between them on the right hand there. You can put lots of different charts at the bottom of your screen and have those that you toggle through. Bear in mind, it will just slow up your overall platform. So having a lot of different markets like that you're toggling through at the bottom of your screen will tend to just slow down the platform in general. Now, moving over to what we can do here with, for example, some of the major markets that we're tracking at the moment. So first of all, US dollar Japanese yen. What I'm going to do, I'm going to change the overall template. So I will right click, and from here I'm going to get rid of the grid line. So I just click on that to get rid of the grid lines. I'll go to properties, and from here I'm going to just change some of the details of the color scheme here. So bar up, I'll keep that as lime. Bar down, I'll adjust that to red. A bull candle, which of course is a positive candle for the market, I'm going to put with an update. I'm going to put as lime. And then from here, I'm going to go down to bear candle, and we'll do that as red. And here we've got volumes, which we don't need to really have on the chart. I'm going to put none for volumes. Bid price is fine to have that in grey, which is the bid price on the chart. Ask price, we can have that in red. Yeah, that all looks good now. So what I'm going to do, so now I've got my color coding sorted out, black background and green and red. I just want to change that now to candlesticks. Okay, so it's moved from bar charts there, and we're now on candlesticks, and that's what you can see. I'm on the daily time frame. Now you can shift, of course, the options at the top here. You can shift from monthly time frame, so you can see here the US dollar Japanese yen has had quite a strong reversal, and that's also really bounced off some very key levels as well, around the 104 zone, which is where we saw the flash crash appear over the festive period, and that's where we're looking at the monthly right now. So you can go from monthly time frame, you can then move over to the weekly time frame, which you can see some support has been coming in since we capitulated a couple of weeks back as well. I always like to go higher time frame for my analysis and then start to move down to lower time frame. You can see very clearly here on the monthly, it's fairly bullish rejection that's occurred here around the 105 zone for US dollar Japanese yen. If we then go over to the daily, well, the daily did break out today and it's pulling back a bit at the moment. It broke out to 110. At the moment, it's around the 109.49 level. I've got ranges this week from about 109 up to around 111 as the zones here. So I'm looking at actually more support to come in, but not until the end of the week, until we get past the European Central Bank announcement. If we have a look at the 4-hour time frame, you can see they're more intraday trading on the 4-hour. The 1-hour time frame can be useful again if you're just trading shorter term. You've then got the 30-minute time frame, which again is useful if you're just trading intraday. You're just looking to get in and out of the market over shorter periods of time. You've then got the option to move into 15-minute time frame. Because it's more data, it'll take a little bit longer to come up with those updates, but I'll just toggle through to give you examples. You could go to then the 5-minute time frame, and you could also go as low as the 1-minute time frame. So that would be a top-down approach. If you're taking it basically from the monthly time frame, you're doing your analysis on the monthly, then you're looking at the major levels on the chart. You then go to the weekly to get confluence. You then look at the daily chart because a lot of the setups from a technical point of view can occur on the daily. You're then looking at the 4-hour chart, and then you're looking at the hourlies and so forth, and you start to get lower into the 30 minutes and the 15 minutes and so forth. So you can see actually the 15-minute chart is breaking out a little bit at the moment. You can see we've got the potential for a retracement. I mean, I still like actually US dollar Japanese yen for a long over the course of this week. Actually 30-minute and the 15-minute, they all look quite good for a breakout above the 109.50 handle and then looking for a long. So from a trade idea point of view and the 1 hour too, you've got quite a lot of confluence there. So if we look at 5-minute, you can see where we've got a neckline at the moment, which is developing on the chart, and we've also got confluence there on multiple time frames. You've got the 5-minute chart, which is getting well supported. You can see it's just about breaking above the neckline at the moment, the 109.5 level, and then you've got the 15-minute chart, which at the moment looks to be on the verge of just breaking above the highs there, so back above the 109.50 level. And you tend to get that, so I'm sure you're aware, with a lot of those major FX markets, they do tend to move very well off key zones like that, so 110, 109.50. So I would actually suggest US dollar Japanese yen is a long at the moment. So if I'm going to go long, I can create a new order, and then I have the choice of either going in market execution, so I get in the trade right now, it's already a confirmed long in my opinion, or I could go with a pending order. So I could wait for the price to either go lower and trigger me at a lower price or trigger me at a higher price there. Majority of the trades that we do are market execution. I do some limit orders, but I'm in front of the screens a lot during major volatility. So I tend to do most of my trades at market execution because I'm monitoring the markets a lot throughout the day and I have all the major levels that I'm looking to get into each of the particular markets at. But if you're not in front of the screens a lot, pending orders are great because you can set up trades at very key levels. So for example, one market I was actually looking at ahead of today, actually I'm going to stick with the US dollar Japanese yen because it's a buy at the moment. I'm going to move over to the pound shortly and talk you through that. Let me just show you what you would need to do here in order to work out your volume on a trade. So for contract for difference trading, I'm going to suggest a trade idea, purely from a trade idea point of view, a long at 109.50, okay, which is where we are at the moment. I'm going to look at a 100-point stop loss, so I'd look at 108.50 as the stop loss zone for that. And I never tuck stop losses exactly on a round number like that. So I'm actually just going to go 10 pips lower, 108.40, just to keep it under a round number. I never put stop losses at exact round numbers like that, 1010 or 108.50 and so forth, because a lot of traders will just tend to be a little bit lazy with their stop losses and put them at exact round numbers. So often you're actually better off, even where I put the stop loss there, something like 108.37 will actually be even more optimal, just to keep it. And you want to just check that it's below any additional levels there on the chart. I'm doing this on the fly at the moment, so apologies, I'm making a few changes to that. This isn't a trade I'm in with these exact levels. I've got a position on US dollar Japanese yen, but these aren't the exact levels. I'm just showing you an example at the moment. So 108.35, for example, would be 115 point stop loss. And then if we were looking at the potential, at least I'd go for a 1-to-1 on that. I'd actually be looking to target approximately 111. So that would be about 150 point target on that. Let's just put that out there. Let's take that off. So let's look at 111. Okay, so we're looking at that, and then the anticipation would be that we get some follow through on the higher time frames, the monthly, the weekly, and that could be a trade that we're looking to capitalize on between now and the European Central Bank announcement at the end of the week. And that could be a trade there. Basically, what I'm looking at here is in terms of profit, just going back to volume sizing and so forth, is if I was to take this trade and if it did hit my profit target, which is 150 points, because I would be getting in, or pips, getting in at 109.50. If I went in at a volume of, we'll go micro and then we'll talk about larger lots. So just for example, let's say I went in at 0.01, which would be a micro lot. Then my profit on that trade going from 109.50 to 111 would be $15. Okay, and that would be on a risk of $10 on that trade approximately. Actually $11. It's about 100. Approximately $11 risk for $15 profit. That would be at a volume here of 0.01. That would be only really for much smaller accounts. Okay, so 0.01, I'd be looking at that amount of risk for that particular trade for 150 point profit. If we start to up it a little bit and we look at a volume of 0.10, that would be $1 per point. So if this trade is profitable and it does hit the target, I would make $150 on the trade, and I'm risking approximately $115 on that trade. So it's 115 pip stop loss, and I'm looking at 150 point target on that trade. So I would make $150, and I could go with a tighter stop loss, could actually go with a 50 point stop loss around this level and put my stop at 109, in which case my risk on that trade, if we actually do that, just to give you an example here, if I move my stop loss higher and I do 109 as a stop loss and we get in there for a long at 109.50, then my risk to the trade is $50 and my profit on the trade would be $150 if I go in at 0.10, which is $1 per point. Then if we go a little bit higher there in terms of the volume, if I was to look at a volume of one lot, which is $10 per point, if I win the trade, I make $1,500 profit. If I lose the trade, I would lose I'd lose $500. So I'm looking at a 3-to-1 on that trade. You can see actually the trade is moving already from my suggested level, which is 109.50. We'll go out and let's have a look again at lower time frames. You can see actually since I've been talking about the trade, it has actually broken out by 5 pips or so. So we were correct in our thinking that this is going to turn out to be a long, and it will be up about 5 or 6 pips at the moment. So if you're in at $1 per pip, for example, you'd be up about $5 or $6 at the moment. If you're in at one lot on the trade, you'd be at $10 per point, you'd be up about $50 or $60 on the trade at the moment. But you can see here where it's breaking out multiple time frames. 15-minute, 30-minute has just broken above the 109.50 level, and the 1 hour has just confirmed that as well. So I've got multiple confirmation there. I can use all of those different time frames that I'm looking at the moment. As I say, I'm kind of bullish on the US dollar Japanese yen as we get past tomorrow's European Central Bank announcement. My feeling is, not just a feeling, but based on a lot of prior European Central Bank announcements, is that by the end of the week, the dollar will be trading considerably higher. Gold, Australian dollar, and New Zealand dollar will be trading considerably lower by the close on Friday. I don't know how the price is going to get there exactly in terms of exact timing. What normally happens is tomorrow after the European Central Bank announcement is it would cause quite a lot of volatility in the market, but later on in the session it often causes a surge on the dollar, a dumping of the euro, gold, Australian dollar, New Zealand dollar, and other commodity currencies. And the levels that we've got coming out this week and all the forecasts we're looking at are all suggesting the US dollar will pick up momentum at the end of the week, which would help the US dollar Japanese yen, and we could see some weakness for commodity currencies. But we'll have to see. We'll have to see how that plays out. But certainly the US dollar Japanese yen at the moment is just a short-term long right now, just on lower time frames. And if you're looking at that from a 109.50 execution point of view, you'd be up about 5 pips. But the expectation is that we'll continue to see some momentum to the upside. If you want to just take brief notes on that with respect to volume, so that's what your pound, I'm sure a lot of you are aware of this anyway, but just on your pound per pip. So basically your volume is how heavy that you would take that trade. Obviously you can put the stop loss in, you can put the take profit in, and a lot of Forex trades, most of the time you're looking at about 50 to 100 pip stop losses on those. In terms of swing trades based off a daily time frame or a 4-hour time frame, and what you'd be looking at is essentially one lot is $10 per point. So if you were targeting 100 pips on a trade, or your stop loss was 100 pips, you're looking at $1,000. Okay, both sides of the trade, so for a risk and for a profit. If you are looking at, for example, 0.10, which is $1 per point, if you make 100 pips on a trade, you make $100. If you lose 100 pips on a trade, you lose $100. And if you went down to 0.01, which is a micro volume, then you would be looking at a profit. If the trade was to work out and hit your target for 100 pips, you'd make $100. If the trade was to lose with 100 pip stop loss and 0.01 volume, you'd lose $10. Okay, so those are the difference there in volumes. You put your volume in here. It's a bit like you would on any other platform where you're just putting in your dollar or pound per point. The only difference is when you're trading contracts for difference is just be aware it trades in lots. So 1.00, for example, is not $1 or £1 per point. It's 10. And then if you wanted to go in at $1 per point, it's 0.10. And if you wanted to do 10 cents per pip, it's 0.01. You've got your stop loss and your take profit. And then that's all a market execution. The other option here is like a limit order. So for example, a buy limit order, if I felt like the price was going to go lower, but I'm going to be around the screens, and I wanted to, for example, buy at 109, I could set the price here. So if the price gets to 109, I would put my my dollar per point there. So let's say if it's one lot, I could put a buy limit that will get me in the trade automatically if the price gets down to 109. I can put my stop loss in there, so I could put in, for example, 108.35, and then have my target there, which might be 111, for example. And I can set up all the criteria of the trade, press place, and it will just put that in the market. And then the trade would only get triggered if the price comes down to my strike price at 109. So I don't need to be in front of the charts when that happens. And it can give you the ability to get into some better trades at better entries to be able to do that. And now that I've set up my chart, I'm starting to get everything set up. I can just drag any chart from the right now and overlay it, and it will save those settings. So I can just work off this template now. So I've got, for example, Australian dollar, US dollar. You can see on the monthly chart there, it's been building up momentum, the weekly as well. Even the daily as well is getting some good support at the moment. The 4-hour time frame looks like it could break out higher. You've got the hourlies there where it's been consolidating today, but looks like it could still ramp up a little bit higher, although I am expecting potentially commodity currencies to sell off by Friday. But in the run up to ECB, they might get some support. And you can see there just lower time frame. So I can move between different charts there. Let's actually have a look at New Zealand dollar, US dollar. That had quite a sizable move today. If we look at the weekly charts, been building some momentum. The daily as well broke out today up to about the 0.68 handle just below that, and it has been getting some support today. Lower time frames as well are all showing a bit of support, although I'm still expecting potential for a sell-off by the end of the week. US dollar CAD, well, we've actually been long US dollar CAD this week. We took that breakout to the upside. Bank profits yesterday. It's consolidating at the moment. To a certain degree, that will be dependent on oil as well. So when oil's selling off, USD CAD goes up, and when oil goes up, USD CAD tends to go down. Could still see more upside potential as we go throughout this month. If you look at the weekly chart there, but on the dailies, it may have completed in terms of the move. We've had a fairly reasonable move on that so far this week. But then what we can do is we can add some additional indicators which will help you a little bit when you're trading, just to see what some of the other traders are looking at. These are they're basic in terms of indicators that you can use, but certainly having some awareness of where these levels fit on your chart can help you making decisions. So what I would add with the MetaTrader 5 platform, I would certainly add, I think it's worthwhile putting on the Bollinger Bands, because those will, and I would set those just deviation of 2. You can normally do deviation of 2 or 1 on my preferred, but I do that as a deviation of 2. And you can see here, because it will track the 20-day moving average in the middle there. I'll just show you that again, actually. So just show property of Bollinger Bands. It's based on period of a 20-day moving average and a deviation of 2 from that period. So the midpoint of the Bollinger Band is going to be the 20-day moving average. And that's useful just to have on your chart anyway, because we've seen that a lot with trend trading. When the price is essentially around the 20 MA within an upward trend, often the price will retrace back to that zone, and you can use it as a buying opportunity. If it breaks and closes below that, the expectations will move towards the lower Bollinger Band, and that's what we've seen quite a lot of late. So US dollar CAD in the last couple of days has closed above the 20 MA, which suggests that it might be changing in its trend. Then what I would put on here is a 50-day moving average, which can be quite useful. So if you go to moving averages, I'll do the 50, and I'll do that as crimson. And you can see, in fact, where today we're holding just below the 50-day moving average at the moment. We broke out and came very close to that level just yesterday. So it's useful to have that on majority of markets, just to be aware. You don't necessarily have to make trading decisions based off it, but it can be useful to know where it sits in the market, because often if you've had a good move and you're in some decent profit, like for example today, if you knew where the 50 MA sat in the market, you might think, okay, it will probably stumble to get beyond that zone, and I'm up already 100 pips or 150 pips. I'll just bank here and see how it handles a retest the 50-day moving average. Those are some of my favorite indicators. So 20 MA, 50-day moving average. We talk about it also on the commodities corner as well, some of the key moving averages that you want to have on your chart. I'm going to take off the 50 MA and keep it really basic for the time being with the Bollingers and 20-day moving average there, because those are quite easy to add, and we can just have a look at that with respect to some of the other markets we're looking at the moment as well. So US dollar, Japanese yen, you can see actually today where it broke out towards the upper end of the Bollinger Band. So for a shorter term trade, you should have been banking potentially around that zone today. If you were in long, you would have felt that it would be worthwhile taking some profits off the table with a retest of the upper Bollinger Band. But we are moving back within an upward trend there on US dollar, Japanese yen. We'll move over and just have a look. New Zealand dollar, US dollar as well. Yeah, that cleared back above the 20 MA yesterday. So it's moving into bullish territory. It's actually starting to turn in terms of momentum there. If we move over to US dollar CAD, and US dollar Swiss franc actually is at a bit of a decision point now as we get towards the European Central Bank announcement. The pound US dollar is interesting because it's had quite a runaway move over the last couple of days. We had a buy signal on that yesterday. It's broken out and it's retesting around now the 2-month highs again. It's at the upper end of the Bollinger Bands. If we do see the US dollar pick up momentum after tomorrow's European Central Bank announcement, and we do see some profit taking, the pound could actually sell off quite a lot because it's run up pretty fast here, and it's actually our profit target on that, or a level, our projected level is 1.31 exactly. So if we run up to that level, then find resistance, it could actually roll over and be a good opportunity to sell it later on in the week around that handle 1.31. I like to keep these charts relatively basic and just keep them set. You can see here the Bollinger Bands can be useful. 20 MA in the middle there just gives you a good idea of what's going on with the price action. Taking the charts from right to left there. We use a lot of fundamentals, breaking news items, sentiment in the market cycles, in addition to technicals. So the technicals really, they do help certainly in order to get the execution, the right levels, put your pending orders and so forth. You definitely want to get to know well how to use the actual platform, execute trades and so forth, and just know how to put on some basic indicators there to help you with your analysis. More importantly as well is that sort of top-down approach. So when you're looking at the monthly, looking at the weekly, looking at the daily, looking at the 4-hour, marrying up with the 1 hour, the 30-hour, the 30-minute, excuse me, and so forth, and 15-minute, and then be focused. Pick what markets you want to be focused on. So for example, with Forex, our preferred markets to be focused on are commodity currencies, so Australian dollar, US dollar. We'll be looking at the following. So the majority of the time, Forex markets, we tend to look at, or our watch list is as follows. So we, of course, we follow gold, silver, oil, platinum. Then we look at Swiss franc. We look at New Zealand dollar, Australian dollar, US dollar, Japanese yen, the pound US dollar, the euro US dollar, the US dollar index, and the S&P 500, and we also look at Ethereum and Bitcoin. Those tend to be day-to-day the main markets that we're tracking. You can go into other crosses like euro, Japanese yen, euro, pound, Swiss franc, pound, Japanese yen, all the other crosses there. It really comes down to what your preferred markets are for tracking, what your preferences are. But those are our preferred markets because a lot of them are very correlated to commodities, and of course we've got so much data and research on commodities. The correlations itself can be very helpful in just seeing where the market is likely to head to next. I would suggest tomorrow needs to be on your radar that there is a European Central Bank announcement. So normally in 2018, European Central Bank announcements, they create volatility on the day, but later on in the session they can, especially on Friday, they can give strength to the US dollar, and potentially you might see some pullbacks on the pound, the euro, New Zealand dollar, and some other crosses later on in the day on Friday. But we'll have to see. It's not always the case, but that's the expectation at the moment, and that's also just how you set up your charts to be able to utilize this within multiple time frames, how to just set up your market watch at the right, how to go to new order and just execute trades on the platform, how to just calculate your volumes, where to put your stop loss, your entry price here, and how to just toggle from the markets on the right. You can build up your watch list there as well. So what you can do, your watch list on the right there, you can just build up the markets, you can move them around. So for example, you can organize it, you can move markets down, you can move them up, so you can keep your watch list towards the top right hand corner. But I do hope that helps, guys. I think there's been a couple of questions, so I would just shift over to those questions and let's have a look. Yes, Robert, I would agree with that. In terms of the MetaTrader 5 platform, it's very similar to the MetaTrader 4 platform. You can, but they won't be so custom indicators for MetaTrader 4 won't work in MetaTrader 5. There'll need to be custom indicators for MetaTrader 5 in order to upload them and add them. But you can, but they need to be they need to sync with MetaTrader 5. It'll be contracts for difference on the MT5 platform. Yes, that's it. And just coming back to some of the additional questions there as well. Thanks for that, Robert. There will be a recording of today's session. Make sure that you, and this is for everybody, that you're subscribed to the MetaTrader 5 platform. Because if you're subscribed to the MetaTrader 5 platform, that will, subscribe to the binary.com YouTube channel And of course, make sure you set up with the MetaTrader 5 platform, but make sure you subscribe to the YouTube channel because you'll get all of the recordings. If you signed up for this webinar, you'll automatically get sent a recording anyway and just a notification with the recording. But make sure if you go to Binary.com YouTube channel, you're subscribed, you'll get all of the recordings of all of the webinars which come through. Okay, fantastic. Hope that helps, guys. Okay, super. So that's it really in terms of the MetaTrader 5 training today. And we'll catch you back here on Friday for the Commodities Corner. So that'll be at 4 o'clock London time on Friday, which will be quite nice because we can review the markets following on from what's happened during the European Central Bank announcement as well. If you do want to join us we've got a session tomorrow where we'll be prepping all of our traders for the European Central Bank announcement. You can do so. It's via www.jointhelivetradingroom.com. So that's the link. And just for some of you who came in a little bit later, make sure this is the YouTube channel link for the Gold and Silver Club as well. Robert, no problem at all. But if you click on that link, make sure you subscribe to our YouTube channel because you'll get all of the latest commodity reports that we put out regularly on there as well. So definitely do that. But that's the link, www.jointhelivetradingroom.com if you want to become a private client. And you'll get basically exclusive live trading room webinars, real-time trade alerts, trading research and market insights. You'll get access to our private Members Academy website and access to support and mentoring as well. Okay, fantastic. So with that, I'm glad that helps, and we'll catch you all back here on Friday's session. And I wish you all good trading, and we'll speak to you on the next one. Okay, thanks guys, and thanks very much to Sharice and the team at Binary.com for hosting today's session. All the best, and bye for now.